Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session or a late morning update on. I want to do everything but the stock market. I just wrapped up a video covering the SPY, QQQ, NQES, the major stock indexes, covered short to long-term charts. And in this video, I just want to cover the other things, and this is a big part of my trading. Part of that is I'm a huge proponent of asset allocation. In my former life, I was a financial advisor, stockbroker, career stockbroker, and a big part of advising anybody on their investment portfolio, I'm talking long-term investments, is a term we call asset allocation. And there are studies that show that asset allocation is more important to your overall returns than actual security selection, meaning picking, AT&T versus Time Warner, or AT&T versus Apple, or whatever. That's individual security selection. So asset allocation, you have your different asset classes, such as stocks. And within there you have different subsectors or sub categories of stocks: U.S. stocks, international, large caps, small caps, etc. Then you have bonds. Bonds are a completely different asset class, and within bonds, of course, you have government bonds, corporate bonds, high-yield corporate bonds, municipal bonds, all types. And then, of course, you have commodities: gold, precious metal. You have agricultural commodities, crude oil. And so within the whole sphere of commodities, they are a different asset class. There is just a tremendous amount of disparity because crude oil has very little to do with wheat, for example. So again, the key to I think investing and actively trading as well. It works just as well in actively trading. Last couple weeks have been really good for me. I've had core shorts on the indexes, and yet I've made money consistently the last few weeks, largely from precious metals being long and short. So I'm a very active trader, and it's funny because if you recall a few weeks back, all through here for a while, I said I was hedging my equity shorts when we were in those trading ranges. I was hedging my index equity shorts with short trades on the precious metals, and I did it for two reasons. Number one, the charts were clearly had these bearish divergences, overbought conditions, uptrend line. There was a big wedge right here, and took a while to play out, but finally they dropped, and we had a big, nice correction. So right here, those shorts worked well. And then just yesterday, I mentioned that my convictions were pretty strong that this gold was at a very good support level. It had overshot it, which is even a little bit better. The fact that you get that bull trap thing going right there when the shorts pile in on a break of 1500, longs pile out. So I said at the same time, I could see some more upside in the equity markets. I think a reversal's coming soon. I still maintain that upside's limited, but as I showed you in the other videos in the last few days, I was drawing the divergence lines higher, saying, look, we can continue to push up, and doing so will keep those divergences intact. Doesn't change the technical posture of the market from that point of view. But as I said, it's possible and likely, I thought, even to see precious metals and the stock market rally together, and that's exactly what happened. Futures lifted overnight, stock market's up today, and so are precious metals. Gold is up. It's well off the highs for the day, and it's still up 1%. Gold futures is down here in the corner. You don't see that down here, 0.89%. So there it is. So while I was short the metals recently, due to the fact that I was hedging against a possible rise in the stock market, I went long the metals. Really, you can't even call it a hedge, because I said if the markets go up, then I'm going to lose on those index shorts, but I'll also gain on here. And the point being, it's the charts, and that's why people sometimes get tied up in these relationships. There is an inverse relationship. Longer term, it is unmistakable, an inverse relationship between the risk-off assets and the risk-on assets. Risk-on assets are your stocks, for example, things like that. They're definitely risk-on, and tech stocks especially. Risk-off are treasury bonds, gold. Those are the two main risk-off assets. So I've showed it many times, gone back for decades on charts, and showed you there's a clear, inverse correlation between the two. But then it disconnects, and that's where some people kind of maybe say, well, that doesn't work anymore. And that's because there are these, shorter term technical setups, if you will, and that's what causes that. So either way, that's it. I just wanted to update it there. Gold came within spitting distance there. We hit a high of about 132.50, and that's where that target was. As I said, I always, suggest, what I do personally is sell before you get to an actual resistance level. So gold I'm out of, but I'm still in some of these other ones, and I still think, I'll tell you, I think gold's going to probably make another thrust up here and maybe come at this level. Let me give you that level now. I may buy back into gold. But I did actually add it back to platinum and silver today. But gold, see, I don't have a trend line on gold, or really, there is a horizontal level I can notice now right here as I'm doing this video. And so far it seems to be holding that level. It's right here, these reaction lows. So there's a level that might provide an objective entry. And so I may go back into some gold now. But let me get to the other ones here. Silver. Okay, silver bullish falling wedge breakout. I updated this morning, and I said I gave you these trend lines on silver and platinum. Those are the two that, like I said, I added to. So we have this trend line here, and so we had a nice lift up this morning. Platinum was up really big at one point, pulled back, and you've had several opportunities to either buy back into it on a pullback to that trend line. I think it was when I posted it this morning. We were probably right here. Let me see if I can find those. Okay, yeah, here's the front page post. There's platinum, and so there's targets up here, and there's that trend line to watch. And we'll go back to that chart of platinum. No, I was on silver right now, wasn't I? Yes, I was. I was on silver. There it is, silver. So we kissed that little target. And here's a trend line that you can buy pullbacks to, and this is where I think we're going with reactions along the way on each of these. So that was then, and we were, I guess, right there at that point. And let me find that chart down here. So there it is. So that was, I guess, that tag somewhere in there. So we've come back to it. Now look, as I also said, you can do one of two things. You can either buy pullbacks to that support level, and if long, you can also use it as a stop, because look, maybe this is all we get for the rally, for the oversold bounce, and this wedge breakout. I can tell you the wedge, the projection has been met. If you look at the measured target, widest part of the wedge right here, add that to where wedge breaks out. I'm just rough estimating that line. So we've essentially hit the measured target for the wedge. And so what I said is you can one of two things. If you believe it, I think we'll probably go up here. I favor that, and that's why added to my position on a pullback there. You can also set a tight stop below, or if you entered here, if you got an entry on the breakout or the pullback to support 17,880, you can set your stop there for a break even on the trade. It all depends. There's a lot of ways to trade, or you can scale out too if you have multiple lots, multiple positions. So either way, I just want to mention that we're still above this trend here. Sometime this was an intra-period spike. That's why I say the 60-minute close is ideal. If you use a stop on a trend line like that, and it's well watched, they'll take you out. The market makers see that. They pull it down real quick, run the stops, and then gun it back up. And that's why a 60-minute close is often a better way to go on a when trading on a 60-minute chart. So I just added a support level to it, about 1806 right there. I can see a pretty decent support shelf, and so actually that's where I'll be concerned if silver goes much below 1806 there. Palladium, I didn't cover that this morning because I'm still not. I mentioned I may short this one, but I told you I didn't take it yesterday, and it hasn't broken this trend line. There's still a lot of momentum in this one. It's diverging. It's like the stock market's going up, diverging, but I think there'll be a nice short trade coming. In fact, we're just above that previous high. I don't see any sell signals yet. If we get a reversal or something here soon, I may add that one if I'm still in the other metals, but I actually may be out of those. If we can bounce, get another thrust up in silver, in platinum today, then I'll hit my targets. I'll be out. That's fine. I'll stand aside. I just want to say that. I've been long short recently, but trying to extend this trend line. It's not working. There it goes. Something like that. So we're back testing that trend line right there. It's very hard to work these charts on IB. They're quite lacking. There it is. So back test that trend line, And looks compelling here. No sell signals yet. I'll have to get back to you on that one. All right. One more I wanted to show you was I was trying to pull up platinum. Where's my platinum chart? Here it is. Same story. If we go back to today's post, that was silver. That was platinum. And I see my target zone right there. And I said, there's that same kind of uptrend line that I showed you on silver, where you can buy pullbacks to, or use that if you want to run a tight stop. So let me go back to platinum. That was this morning's chart. And let me see if I can find it here. And that's it. So you can see since then we hit that level. Boom, perfect tag. And so that's where that big red candle I added to my position. And so I'm looking to get out just shy of that bottom of that target zone, and then it'll most likely reverse. Can't tell you whether I'll be shorting it or not, meaning reversing, but I already have an order to sell it right now just below that level there. And of course that was, what is the that lower line is at 965.69, so I want to get out just a little shy of that. I think it'll probably continue up to the top of the zone. And if I'm focused if I'm not doing a video or anything else at the time, what I'll do sometimes is if it starts to get there, I'll pull my sell limit order, and then when it gets up to that level, then put a stop loss right below there. And what that lets me do is lock in almost all the gains up to that point. And then if it wants to continue to ride, I'll just manually raise that stop loss order and see if I can target either the top of the range, or maybe it breaks out and it keeps going there if the stock market rolls over. But if the stock market's holding up, I'll tell you, I'll be out PL if it gets there. Okay, enough of the metals. You guys, I've covered those ad nauseum lately. Let me show you some other things I'm watching lately. BRR Bitcoin. This one's been tradable lately. I had just, I've seen these patterns. I didn't take them. I shared some of these on the site, but it's just been trading so well to the technicals. The last thing I was watching was this divergent low right here, and I had a downtrend line right there. It broke out of the downtrend line and it rallied right up to what would have been my target had I taken that breakout, 10,478. So I'm sharing this chart not as an after the fact thing, but showing you these levels. So now here we had a divergent low and it only just went up, so I probably wouldn't short it. That's where I would have taken profits, but what I would expect is probably a pullback here. I'm still longer term bearish on Bitcoin, by the way, but again, talking just near term trading stuff. You had this wedge type pattern here recently, big support down there, I think at 994.54. That's like give up the ghost kind of stuff. If that breaks, get out of Dodge, get out of your Bitcoin. But we're still above it. We broke above this wedge here, rallied up, put in a divergent high, and this is what I'm talking about, just how the technicals are playing out very well. Divergent high right into resistance, and I believe if you looked at my chart when I covered this a couple weeks ago, I had these same levels there. That 111.57 level, hit it to the button, hit it with divergent high. That would have been in a very objective short entry right there with a stop somewhat above. It reversed. And then when you started to see the divergences forming, you could have either covered or you could have waited to reverse, wait for a breakout, and then reverse from short to long. And then, like I said, boom, hit that target. If it were to go up any more, that would be the next resistance. So I won't spend a lot of time on it. Here's probably a trend line off the lows we can watch. Just again, a tradable little vehicle. I'm surprised, and I might have to start putting a little more of my focus back onto this. Get some more trades there. Here's CC, Cocoa Futures, the ETFs. I'll try to make a point to mention the ETFs on Bitcoin. GBTC, I believe, is the ETF that you can use to trade Bitcoin or ETF-like instrument. Here's CC. I mentioned CC a while back here. Broke out, hit this first target I had, resistance 2278, flirted around that for a while, finally broke out, back tested it, successful back test. It's moving up. So here's the uptrend line. So NIB is the ETF. There is some divergence forming, but I don't plan to short this one. I don't have a position in this one. I should. But I mentioned it as a trade idea for you guys, and that's why I wanted to do the update. I think it'll continue to work its way up here. Wouldn't chase it right now with the divergences in place, but if they get burned through soon, this is my next target up here, 244.44. That'd be a pretty good move. I'll have to, I don't want to make this video too long. If I do that, cover the charts NIB and each of the ETNs, it's going to take forever. But I'll watch these. Again, I wanted to mention these as trade ideas, which I have. I'm seeing a lot of the ag commodities firm up. For the very least, swing tradable bear market rallies. That's been the MO for a while. We're in a bear market in ag commodities, but there's been plenty of long side trading ops within that bear market. Very lucrative ones at that. Let me find you a few more here. Oh, completely off top, not an ag commodity, but I have updated crude. Crude, I mentioned a beautiful shorting up in the trading room. That one I took, and I know some others did because they thanked me on that trade right there, that push up to 58.79. And I had said you can either short it there, a bit aggressive, but you're shorting it at resistance, pretty good resistance level, while overbought with divergences, and/or short a break of the trend line. I gave you at the time these first two targets, and then I did an update the other day, and I said, once these were both taken out impulsively, that opened the door for this leg down. It set up the other day a bear flag, beautiful. This is just a beautiful little example of technical analysis right now. I also threw out there to you guys last week DRIP, one of the short or any of the short ETNs. But look at that. That is straight out of the textbooks for a bear flag pattern. If you want to know what a bear flag should look like, symmetry and all, you want to see an impulsive leg down. They call that the flagpole, followed by an area of consolidation, takes an upward shape of a flag like that, followed by another break, which is usually equally as impulsive. Boom, right down. This is a support level. In fact, gosh, I wish I would have saw that earlier. I would have taken it right at 54.16. It has already bounced a little bit off there. Could run on down here. If it takes out today's lows, it's going to go down here, and that might offer an objective long. But see, I don't have divergence right now. I would have just at most done a bounce trade. That means I would have gone long here at 54.16 as I'm watching. I've been doing updates, and I just had another video that I'm wrapping up. I got to get out to you guys now. I just wrapped up on the equity markets. But yeah, you just go long there and you put a stop, let it ride, either target a quick bounce or just let it ride. Maybe it bounces all the way back up here to that flag area. That's pretty good resistance around 55.83. And if it happens to take another leg down, especially if the charts confirm, get some divergence, you can see these are the next two support levels. But that should be boding well for those ETFs that I mentioned. I told you the energy stocks are due for a pullback, and DRIP is one of them. Yeah, up 6.25%. This one I do have. I bought one I told you the other day. Bought some DRIP and some swing trading accounts. So up today. I think it was looks like down yesterday. It was up at one point yesterday. I remember checking it. I was trying to get back to the ag commodities, but I'm going in order here. All these 60-minute charts I have up on one screen. That's the trend line that I mentioned 3 days ago. I told you crude was a member had asked, and I posted that as a reply to a member, short there, and then target a pullback to the trend line. And you usually want to cover just before the actual resistance support level, and so we had a nice pullback in nat gas sense. This is NG, by the way, and you can trade nat gas via UNG or UGAZ or DGAZ. Those last two are leveraged short and long ETFs. All right, or ETNs, technically speaking. Next up, this is corn futures. Symbol Z as in zebra, C as in Charlie. You can trade corn with an ETN by the same name, CORN. Very simple, easy to remember. This one's ready to pop. That looks like a breakout above 33.63.114. You can see right there. It's been resistance. Looks like a little basing pattern, almost a small, kind of flattish inverse head and shoulders bottoming pattern. So when this one breaks, I'd say at least coming up to these reaction highs here. I'll give you another line here, level to target. So this is a potential trading op right here. Put a line there. That would be the first target, about 369.35 or so, and then up here. So let's just say near term right now, looking at these two targets. And again, just a little more upside should do the trick to break us out of that one on corn. And here's another one that continues to do well. All of these were highlighted recently, last couple weeks. This one was highlighted as a bullish alongside setup. Divergent low right there. You can see we had positive divergence, and then a little minor up downtrend line to trigger a buy signal. It went up, and then I believe I would have highlighted this downtrend line as well. If not, there it is. And then boom, that one did the trick. Look at that impulsive buying after that breakout. Ran right up here. I had my first target back then at 477 and change. You can see it, and then 484. Both of those were hit. That one was hit. That one was hit twice. It was hit again today. When we hit it today, we had a divergent high. So this one may need a breather right now. If and when, let's see if we can consolidate in here. What it would look like to me, I may need to zoom out a little bit further on this chart. Potential bottoming basing pattern right here. So really about pop over today's highs could do the trick to send us all the way up here to about that 515-ish area, maybe even more. Here we'll go to a 3-month chart, go about a little longer. Keep those trend lines there and see maybe we have a downtrend line coming into play. Yeah, we broke out above that downtrend line there. So yeah, this one's looking good. Like I said, just put in a divergent highs, had a little bit of a run, but sometimes these commodities, especially things like coffee, when they start to get some upside traction, they can really go, they can really run. So we'll keep an eye on wheat. Wheat, oh, by the way, wheat will move very closely, it'll trade very closely with corn that I already showed you. So if you take wheat, the ETN is WEAT. Drop the H, just WEAT. Then you want to just keep that in mind, that they move closely together. So you might burn through these divergences, maybe a back test of this trend line. I'll keep an eye on it. And again, replicate this chart. And if you have any questions, just drop me a line. I'll be glad to post an updated image of this chart for you if you're interested in trading wheat futures. Coffee. Let me show you coffee. Okay, I highlighted this one recently too. This one I like and have liked. Coffee had this downtrend line right here, and I think when I showed it to you a week or two ago, we were right here, and I said, should have said 97.73, break above that level, because we already took out the downtrend line, but then we had this basing pattern right here. See, that's a common theme on a lot of these. Get these basing patterns, and then this one wasn't as clear, but you had a downtrend line. You break out, and coffee, when it wants to run, it can run. That's one thing I know about it. Overbought becomes much more overbought, and so you can see the move so far and try to measure it out. Since the breakout above the downtrend line, that's about a 9% rally in coffee in just the last few days. So a lot of money to be made in these ag commodities. And again, it's a way to diversify. If you're just trading QQQ or TVIX or SPY, you got to be frustrated. Even if you're long, we're moving up a little bit, but not a whole lot lately. So I like to mix things up. And here's well, I was trying to draw something for you here. Coffee looks like it might be bull flagging. That's what I was trying to do for you, showing you an impulsive leg up, followed by an area of consolidation right at, just flagging right above my 102 target right there. That was a price target. My next target's up here, and I may add additional targets. Actually, I'm going to give you one more right now. Again, there's just so many securities, hard to do updates on all of these all the time, but there it is. These are your targets. So what you'd want to look for is a breakout above the flag, an impulsive breakout above the flag, and if you take out the previous highs, and that would propel us up here to that 109 target right there, and I think that's a pretty likely target to be hit soon. So that's KC. The ETN for that is JO. There's also JOFF, but that one is not actively. I think they moved it to a different exchange. They replaced it with JO, so I think JO is the way to go on if you trade ETNs instead of futures. I think that's it. Let me make sure I covered everything here. Well, you know what, here's one more. I didn't have the chart loaded. I just had to pull the chart, so I don't have it annotated. Soybeans. They're also going to run. Soybeans will tend to run with corn and wheat. In fact, they're in the same ETF together called JJG. If you want to kill 3 birds with 1 stone, JJG will give you corn, wheat, and soybeans all in one ETN. I'm trying to look and see how clean a downtrend line I can form. But like everything else, a lot of things, I'm seeing these divergent lows. Bullish divergence, and and money finally starting to shift into these. So again, this is where I think a piece of the portfolio, piece of the pie makes sense right now. Whether you're a an active trader or even a swing trader, or maybe even a long-term investor, eventually this bear market and commodities will end, and at which point there's going to be a lot of gains to be made in a lot of these. That would be my first target right there, and I'll try to again get to those charts. We'll see, like JJG, I haven't even pulled that chart in ages. I'll probably have to mark it up here. Let's see if I have any levels there for you. No, I don't. But yeah, like I said, I have to study this chart a little further, but I'm sure it's the same story, similar downtrend line that I was just showing you there. A little bit of divergence shows through. It's that same divergence I showed you on the 60-minute chart. And this one could probably run up here. There seems to be a lot of supply right here. That would be a logical swing target there, about 46 almost, and that would give you about a 7.5% lift on JJG. And of course, if that could be, sooner or later the bottom comes in these grains, and there may be a lot more upside. All right, let me wrap it up here. That's a lot of trade ideas, and again, just some things outside the usual stock market index stuff. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.